And so having this videotape will make it easy for me to just direct somebody to this. In other words, they call, they want a workshop, and I say, hey, that's great. Get the video, and you'll get what you need. And speaking of getting what you need, I want you guys to, first of all, understand or know that there's plenty of time built in to this to answer your questions. So I am encouraging you to make comments and to ask questions. As a matter of fact, I mean, I'm looking as a creative experience in the way that all of you came here for a specific reason, maybe many reasons. You have your own purposes for being here. I presume, based on how the workshop did in the first place, that your primary consideration or primary purpose for being here is to create greater degrees of consistency with your trading. This is what this workshop is all about. It's about creating consistency. And as all of you well know, that's not an easy task for what we've chosen to do. I think all of you also probably know, and I don't know what the experience level is of this group. I mean, I know some of the people in this group have been in the business for a long time. There's other people that I've never met before. But I assume that all have experienced what I'm going to call this kind of reality gap between what you realize as being possible from the market. In other words, what we're looking at is this kind of unlimited potential to, let's say, enrich ourselves, and the difference between what we can perceive and see as unlimited potential to enrich ourselves and what we end up with on our bottom line. And there could be a huge gap there. And so what I'm going to do in the next 2.5 days, and it will go very fast, it really will, but what I'm going to do in the next 2.5 days is give you a very detailed and comprehensive
Pete, welcome
on how to close
this
that
is
gap.
what I'm here for, supernova moves.
At the same
They are
time,
very rare. You only want to catch them once.
I want you to keep something in mind.
With the right amount of cash.
Because you're here and because you're exposing yourself to this information, it doesn't necessarily mean that you have to utilize it or utilize it right away.
Please like the live, please.
A lot of the stuff
Thank you.
you're going to hear in the next 2.5 days, you might not really want to act on or
follow
do
me on
anything
Twitter
about for
at
quite a while.
WT.
And like an example I can give you in my own personal life is that there are many times that I felt compelled to buy books and just skim them a little bit, see the potential that may be in that book, and yet not be ready to read it for several years later. That's happened many times in my life. And when the time was right, it's like I found myself reaching for that particular book and got into it and stayed into it until I, gleaned whatever it is that was in it that I needed out of it. And you might find that
Sir Sly, you got to get out of that. Once it's not going your way, you got to get out of there.
Because of something that you're going to hear this
and go on SPI.
May excite you.
Plenty of opportunities today on SPI. You don't have to catch the whole move.
There's a huge gap between what we desire and what we're
You don't have to catch the whole move.
And that's basically what this really is all about. And it may take years. And I guess the way I like to describe that particular, I guess when I say it may take years, is it's what I call psychological distance. Psychological distance is very abstract and it's extremely difficult to measure. Meaning that if there is an ideal mindset that we're going to talk about.
Please like the live.
I'm going to give you. There's an ideal mindset for creating consistent results.
I had to get out of here early this morning.
That's our goal, let's say.
I made my video at 5 a.m. this morning because I had to take care of something.
To get to that ideal mindset right here, okay? And what am I?
I had a feeling something was going to pop off. That's why I said follow me on Twitter
talking about never having a loss
for alerts.
What? Apparently, no. I'm not talking about never having a loss.
I knew if it break 205, I knew it was going to run.
That basically, that you get this nice gentle rise, or even let's put it this way, a nice slope on an equity curve that doesn't reflect trading errors. We're going to have losses, but that's a lot different than an equity curve that looks something like this. Okay, and then you work on it a little bit more, and you got one of these again. These kinds of huge dips or drop-offs in our equity curve are always going to be the result of trading errors of one type or another. I know it's very easy to say, no, it was the market conditions that did this to me. But if you investigate these situations much closer, you're going to find that they're always going to be the result of a trading error of some sort. If we just eliminated our trading errors from our trading, probably with the kind of experience levels that exist in this group, and what I mean by experience levels are just, your ability to read the markets, your ability to identify an edge. I would bet that if you went back and really
Sir Sly, I sold RENN. I think I sold that one for about 15% profit.
Or had a way of at least having.
Thank you for that alert.
RENN. Diary or information about your trade.
I'm out of it
today. Go back and say, you know what? If I didn't make this error, this error, this error, and this error, instead of my equity curve looking like this, it would look like that. Now, there is an ideal mindset to create this. This is the blueprint I'm going to give you. I'm going to give you a blueprint for that ideal mindset. But we're talking about, the problem here is that we're talking about psychology. We're talking about mental makeup. These are not things that we typically grow up learning how to work with. We don't go through grade school getting psychology courses. We don't even really get, probably good psychology. Maybe today the kids in high school might. I don't really know. I didn't in high school. And I don't even think the psychology courses in many colleges are probably that good, because they're perpetuating what people did 100 years ago instead of really, in many cases, being.
I really don't like to hold and hope.
So since we're talking about our mental makeup, we're going to have to learn some skills. We're going to have to learn skills to bridge, let's say, this gap between, let's see, where someone might be here and this distance to this psychological, let's say, this is the psychological distance to this particular mindset that they're trying to acquire. In essence, they're saying, I need to reinvent myself in some ways. Now, what does that distance mean? Well, it's very abstract. There's really no way to say that it has anything to do with linear inches or centimeters or whatever. It's more, I would say it's more like software code. It would be saying,
I had a
like,
subscriber banked really big today.
Software program that was consisted of,
you turned $4,000 into $30,000.
And that code was virtually perfect, except that it had one period,
in a couple of hours.
line. And that
you said just because I got into the play. That's why you went in.
Ran perfectly.
But I always go into my place. I always go into my place.
In which that one period that's out of place caused the whole thing
I always
to shut
put
down.
My money. If it's even $50, I always put my money in my place.
Shutdown. Okay. Now you could say, if you want to equate this to psychological distance, you could say that what's the distance between?
Congrats to him.
Between, let's say, where that person's at and the
DAVESPLAY,
ideal or most
a
perfect
go a long way.
mindset. Just one period away, right? The problem is finding that particular line, and knowing how to fix the error. It would be there's a
in order for you to get in the low $2 today, you had to have
that I read many years ago. I don't remember what book it
WEBULL,
was in, but
3 hours trading.
There was something wrong.
It was
with,
at $1.50. I got in at 189.
Okay, and so they called the hospital called the plumber.
But regulation time, the stock opened up at 3:33.
Acres of pipes. And he,
Sign up with WEBULL.
Touring the bottom of the,
you get very good prices, and you get early news.
And he takes out his wrench from his, from his belt, and he starts, tapping on a valve here and tapping on a valve
before
there.
Yahoo Finance.
And and he thinks about it a little bit, and then all of a sudden he takes this one valve and he just gives it a whack, and everything runs perfectly.
Sly, you sold 100 ounce
went back,
silver.
sent the hospital a bill.
Okay.
And he sent him a bill for $1,000.
Got to parlay that money.
And the hospital administrator called him up and said, "Hey, what's going on? You're only down here for
I'm about to sell some gold too.
You took a wrench out of your belt and you wrapped, you
I
whacked
need
this
cash.
valve
I need more cash.
and and everything ran perfectly. I mean, come on,
Cash is king.
He said, "Okay, I'll revise the bill." So he sent him a revised bill. Yeah, no. $10 for whacking the valve, $990 for knowing where to whack. Okay? What we're dealing with here is a lot like that. You could only be, there could be a person in this room, and I know Jake's hoping he's that person, but there could be a person in this room who's only one period away, just one flaw away from that ideal mindset. But finding the flaw and fixing the flaw could take
It's a nice feeling to cash in, believe me.
In terms of the kind of expertise that you may need to acquire to be able to do it. Just because you have to get used to.
I'm not even watching the market. I don't even know what the market is doing.
Mental environment. It doesn't have to be hard. It really doesn't. And there are things that we're going to talk about and techniques that I'm going to give you that make it as easy as possible. Most of it just has to do with your willingness. Most of the reason why people are even willing to come to a workshop like this is because of the extreme frustration that they experience between that reality gap that I mentioned a little while ago. That reality gap of, I know these unlimited riches are available. They're possible. They're here. I smell it. I taste it. So I'm so close to it most of the time. But I still can't get it, I still can't bridge that gap between what I know is there and the reality of the bottom line of my statement. So I am assuming that's why you're here. Did I assume correctly? Everyone's here for the same reason then, right? All right. So if you've got questions, I want you to ask those questions. If you've got comments, I want you to make the comments. There's just one thing that I ask of you, and that if I'm on a roll delivering material, just wait until I'm done and then ask the question. Because a lot of times, once I get on a roll delivering material, and if you break my train of thought, and sometimes it's really difficult to get back to where it was. And the other thing, too, is that when we take breaks, let's break. Okay, let's take a break. Don't ask me your question on the break. One, because we're taking a break because I need the break. Number one. Okay? Number two, most of the time, people ask the best questions during lunches and during breaks. They make the best comments during lunches and during breaks. And so what I wish that you do is save it and share it with the rest of the group and share it with the people who are going to be watching this video. Because I'm sure that we've got, a relatively good cross-section of people. And your questions are probably going to be the same kind of questions that people, are going to be asking about how to get through this material and how to understand it. And so not only will you be doing yourself a favor, but you'll be doing them a favor too. Go ahead. Well, I can't see your name.
John Daggett.
John, you don't have to give me, that's all right. Okay, John, go ahead.
Do you find going through this process that people will get an aha moment during that period is that within that trading mentality, within that blueprint, that can be tracked back to outside of the trading environment?
I'm not sure if I know what you mean by outside of a trading environment. What do you mean? Oh, absolutely, sure.
When aha moment comes, can you go back and see those same symptoms and other dynamics?
Yes. As a matter of fact, that's what you're going to find anyway. You're going to find that when it comes to creating consistency, it has to do, it really has to do with how you live your life.
After work. Way to go.
It has virtually, I haven't met anybody yet, and I'm not saying this kind of a person doesn't exist. I've met people who are close to it. I don't know, I can't tell you how many traders I've actually worked with as a trading coach, and I started doing this in 1982. And back then, I was mostly working with floor traders in Chicago. I was hired by clearing firms to clearing firms to work with their floor traders. I mean, these are guys that traded in the in the grain pits. And
Sir Sly, is the market down,
the
Dig?
S&P pits and the meat pits at the
What's the market doing?
Chicago Mercantile Exchange. They trade for their own accounts. And what would happen, especially back in the 80s when things were a lot looser back then, it's not like what it is today. Well, a lot of these clearing firms were like families. And since these guys were trading their own accounts, if they went debit,
every time I invest in Tesla, I lose money. I'm down 12%.
So they let them carry a $50,000 or $100,000 debit, and the guy would work the debit off, and he might get profitable and then go debit again, and that's basically the way the cycle ran until I kind of came along, and they found out about me, and they hired me to help these guys work their way out of their debits and to stay out of their debits, and that way everyone was benefited, because not only the trader but the clearing firm theoretically had less risk. So I've worked with a lot of traders. I have yet to really meet somebody who had the kind of, let's say, mind that was so compartmentalized, that was so divided, that under, let's say, probably the psychiatric industry would call like maybe a true schizophrenic, where they were so compartmentalized that what they did in their personal life didn't affect their trading. Did you get what I just said? That what they did in their personal life did not affect their trading. And it always astounded me, as a matter of fact. What really astounded me was how many traders didn't think that there was a connection. And it was just amazing. It amazed me, working with these guys who would literally, walk out the front door, be screaming at their wife and their kids, kick the dog, and, go down to the pit and have their worst day, of the year, or whatever. And they didn't make the connection. It was bizarre. To me, it was so obvious that, but it wasn't to them. And that's one of the things I help them do, is make that kind of connection. So a lot of what you're going to find that it takes to just create consistency is developing an increased awareness.
It's all about SPI. It's all about SPI today.
And having a way to gauge your state of mind.
Once in a lifetime opportunity.
Having a way to gauge your state of mind so that if you're in the best state of mind to be trading in any given moment, or any given day, or any given hour. Because if you had a way to gauge that, and let's say you weren't addicted to trading in ways that would prevent you from not trading, put it that way, not trading, because in many cases you're going to find that not trading is like putting money in the bank. Literally. Let's say this again. Not trading is like putting money in the bank, because there will be times that you will be in a state of mind that I could virtually guarantee that no matter what your system, no matter what your methodology says, no matter what your system says, it won't make any difference. You will lose money. You can recognize these kinds of states of mind in advance. And that's one of the things you're going to learn how to do this weekend. Or at least I'm going to give you the tools to learn how to do it. And like I said, if you're not addicted to trading in ways that would prevent you from not trading, then what you do is just not trade. And you're making money. You're not trading and you're making money.
What's moving in the after hours?
That's one of the problems also of overtrading. No action, you're trying to force it.
Yeah, exactly. Right. Did everybody hear? Did you guys hear that on the tape? That was one of the problems with overtrading, where there's no action, you're trying to force a trade. See, there are, and I'm sorry, I can't see your name. You don't have your, John, another John? Okay. Yeah, John. See, there is a way that you can learn to recognize when you're forcing a trade. Instead of after the fact, you can learn to recognize it before the fact. But the problem again is that there may be, let's say if you have a tendency to overtrade, your tendency to overtrade may have something to do with some other aspect of your life that really doesn't have anything to do with trading at all. And so when I made the comment earlier about what consistency really consists of, I mean, there's these underlying principles that you're going to have to integrate into your mind so that you can create those kind of consistent results. But in essence, it really boils down to how you live your life. And what the interesting part about all this is the great part, okay? Not the great part. The interesting part is that you don't have to, all this stuff that we're going to learn in the next 2.5 days, all this stuff that we're going to go through, you don't have to know any of it to put on a winning trade. Do you? Absolutely none of it. None. Zero. You can make all the mistakes in the world from, let's say, from the things that we're going to learn and talk about, we would categorize as a mistake. And you know what? You can do it, and it can still turn out to be a winning trade, right? That's the problem. See, the problem is, and that's the problem with doing this work, is that this work can be difficult. And you're just always one trade away, one winning trade away of convincing yourself that you don't have to do it. That's right. That's right. You can be making every mistake in the book and still be winning. You don't have to know anything about yourself. You don't have to know anything even about the markets to put on a winning trade. I've worked with many traders who started their trading career, and when I say they knew nothing, I literally mean they knew nothing. It just so happened that the first trade they put on was a winner. They said, okay, I'm going to buy. And it went up. And they had, I've seen streaks of 15, 16 winning trades in a row from people who knew nothing. Now, you can put on one trade and not know anything. You can put on two, you can put on three, but eventually the streak's going to end. And we know that it's going to end. It's because eventually what's going to happen is that person's going to make an error. Generally, it's going to be a money management error, meaning that if I'm on a winning streak, I'm going to get to the point where I think I'm invincible. And as a result, instead of trading, let's say 1,000 shares, well, next time I decide to trade, I'll put on 10,000 shares. And now, if the market just even goes against me a little bit, a tiny, tiny bit, I can go and stay into a state of mind freeze, which is something I've never experienced, right? And all of a sudden, whack, wham, I'm totally paralyzed because this is just something I didn't anticipate or expect, and then lose a ton of money. And then say, gee, if I could make money and I didn't know anything, just think about, if I learned something about the market, how much money I could make. And so I start buying books and start buying trading systems. Start going to seminars, trying to learn all about the market. In essence, trying to learn about the market in a way that would keep that from happening again, when it never had anything to do with the market.
El Miller,
place, ever.
SPI, talk of the town. A lot of millionaires today.
And that's what's really frustrating about all this. That's why you see people who are absolutely wonderful analysts that can literally call market moves with uncanny accuracy, but make the absolute worst traders imaginable.
Thanks for subscribing, El Miller. Appreciate you. Boom, bam. Appreciate you, bro.
So that was kind of just the beginning housekeeping stuff, okay? Just that I want to encourage you guys to ask questions, because your questions are going to shape this experience. It really is. It's your questions and comments that are going to shape this. And like I said, we've got a ton of material to get through. I've got this organized, or let's say,
Miller, did you trade at all, SPI? Also follow me on Twitter.
That's why I usually start on a Friday night. And
I made my alert pre-market before it reached $2. Because
sometimes it can get a little tight on Sunday afternoons if I didn't do the Friday night thing. And again, depending on how many questions people have.
I had already made my video.
But I do encourage it, like I said,
if you would
just, if I'm on a roll and you want to just wait until after that.
I had a feeling something was going to run big today.
So anybody have any questions right now? We're all set? Okay. So basically what I've kind of done is boiled trading down. By the way, guys, can I walk back there? Can I walk?
Yes.
Okay. How far can I walk? You tell me.
You're still good.
Tell me.
That doesn't look that great.
No? Okay. So
No, that's good.
about right here, right?
Well, when you get in front of the projector, it's not the greatest.
Okay. Right about from here to here then?
Sometimes you could be late to the
Keep going
party
right as far as you want.
Oh, okay,
and
good.
still
Like
enjoy
right
the
here.
party.
Okay.
That thing went to $46.
Thank you. Yeah, see, the other thing about the
What
other
if
room
you
is
see
that I
it
wouldn't have these bright lights.
at $100
Higher
after
ceilings,
hours?
but I wanted you guys to have these good chairs.
Some
I
of these
really did.
movers, they like to move for a couple of days.
Yeah, it really
Let's
does.
see what happens
It makes a
tomorrow.
huge difference. So I just, I thought, okay, I'll put up with the lights. They get the chairs because they won't move the chairs. I mean,
Sometimes
these
they
chairs
think
belong
you're
in this
late.
room. That's
Oh,
it.
you saw it at
Okay?
41.
All the
Wow.
hotels are like that. We run this kind of crap all the time.
Coming from
Anyway,
$2.
so,
Yeah, that's way up there.
Okay, so
Yeah, then
pretty
it
much
plunged.
I've boiled or kind of distilled trading down into 4 general skill sets that you have to acquire to be a
That
consistently
one reminds
successful
me
trader.
of Kodak. Kodak went from $6 to $60.
First of all, you have to
Dollars,
know how
one
to
day.
identify an edge, don't you? Go ahead.
Then
John.
plunged all the way back to $5 in a few
What
days.
we're showing here is a page in the book that we're showing also.
Yeah, I'm
You did
in
the
the
right
introduction
thing.
right now, and
That
I will
was
follow
too-
the presentation.
That was
Will
too
follow.
risky at 40.
We just put this up there so they could, they could. We're not here yet.
You did
okay?
the right thing. You
So
saw
don't
it
worry
right.
about that. However, I don't know if we should take a
Maybe
few minutes
$20
around here
you
before I
could
get going. Do you guys want to do
take a
that?
chance at
There's
$20.
only 13
but
questions
not
on that attitude
$46.
survey. Do you guys want to take about 5 minutes to do that?
The odds are against you.
Just right at the beginning.
Get caught
Right
up
in the
in
beginning of the book.
cards.
Introduction.
Yeah, Kodak was a beast. I recommended that the day
Yeah.
before at $4. I started the pre-market
attitude
at
survey,
$4.
right. Oh, second section.
I started
Sorry.
the position at $7. It
New
went to $20 and came back down to $6.
Okay, so what I've
But
done
the next
is
day,
basically I've broken
It
it
ran
down
from 6 to
into
60.
4 general
Good thing I held
categories
on.
of skill sets. The first,
Oh, you
is learning
sold
to
like
identify an
500
edge.
shares at $12. Where did you
and
get it?
that's the easiest part of this whole process of becoming a consistently successful trader, and therefore the one that most people gravitate towards. Meaning they'll spend
No,
most
don't
of their
worry.
time
As long
learning
as
how
you
to
made
do
some
that,
money,
as opposed to
you're not going to
next
catch
skill
the
set,
exact
which is
bottom, and
probably
you're
the
not
most
going to catch
important,
the
if not
exact
most
top.
important. And that's learning how to think in the
Oh, you got in at
market's
6, so you doubled up.
learning how to think in probabilities.
That's a home run.
And I would say that there isn't anyone in this room
Don't
that
feel
doesn't
bad.
understand the nature of probabilities. And I've worked with people who have who've even majored or have degrees in probabilities. In
Next
college,
time when you
college,
double,
and yet
take
they
half
still
off,
don't know how
half.
to think in probabilities.
next time when you double early, take half.
Because when
Don't
you can
sell
think in
all.
probabilities,
Sell half and see what the
You
the
will
stock is doing.
stop making
I could imagine you must be
automatically
pissed.
stop making the kind of
You
errors
saw that thing went to
that will detract from
$60.
your ability to be consistent.
You should have
So
sold
when
half.
you've effectively learned how to think in
Sold
probabilities,
half and let
it won't even
the other
occur
half
to you
do what it
not
do.
to predefine your risk. It won't occur to you not to cut your losses. It won't occur to you to even hesitate when your edge roll, whatever you define or whatever criteria you use to define an edge, shows up in the market.
Yeah, anytime you
It
double,
won't
you
even
sell
occur
half
to you to jump the gun.
and let the rest do what
It
it do.
won't occur to you
So
not to
you already
take profits
get
or
your
have
money
a
back.
systematic way of taking profits. These
So whatever
things
is left,
just
it's just
will
gravy,
not happen.
icing.
Because when you have effectively integrated into your mindset this ability to think in probabilities, it is completely inconsistent to do these
So the
things
stock
with
went
this
from
thinking methodology. The two are completely
Tesla.
inconsistent with
Tesla
each
keep
other.
eluding me. I just bought a few days
This
ago. I'm down
mindset won't
12%.
let
Every
you
time I
behave
go
that
into
way.
Tesla.
That's basically
But
where
this
we're
time
going
I'm
to get
holding.
to this
This
workshop.
time I'm not gonna. I'm holding. Whatever it does,
But there
doesn't
are
matter.
other problems.
I
There
just
are
own
other
the whole
areas.
risk.
The other area, the next area.
Let
So
it
we've
go
got
to zero. I'm
finding
not,
an
I'm not
edge.
selling this time.
learning how to think in the market's perspective. And then the third one is learning how to identify and neutralize self-sabotaging beliefs. This is big.
So you bought Tesla before the split?
Here's the problem. The market represents an unlimited
El Miller, you bought Tesla
literally
before the
unlimited
split or after
opportunity
the
to
split?
enrich ourselves.
Triple your
We all see
portfolio.
it.
Wow.
It's there. It really is unlimited.
Wow.
Maybe there are some practical
That's
limitations,
amazing.
but for the most part, it's pretty unlimited.
That's how you parlayed the
That
money. So
doesn't
you
mean
took the money from
that
Kodak
kind of things that we've
and you
accumulated,
parlayed
meaning the
it
kind of
into
beliefs
Tesla
that we've accumulated
and tripled your
throughout
portfolio.
our lives that exist in
Oh,
our mental
options. Man,
environment
I
are
hate
in
options,
complete
but I'm trying to
harmony
get back
with
into
our
options.
desire
I almost go
create
bankrupt
consistent
trading
results.
options.
or to tap into, let's say, that
So now I'm getting
unlimited
back
ability to
little,
enrich ourselves.
not more than $100 in options.
In other words, not
I'm
everything
practicing.
that we've learned would
That
argue
thing almost
for
wiped out my account. I took like
increase
2 years
or
break after
vast
that.
riches or prosperity. Not only would it not argue
Them
for, it might
options
argue
are
completely
risky.
against. These are things that we might be conscious of.
And it always
In many
getting the
cases,
money
they
as
are
soon as I
beliefs that we are
sell.
not conscious of
As soon
at
as I
all.
sell,
But what we're going to learn
it's in the money.
tomorrow is that just because we're not conscious of something that we've learned at some point in our lives, it doesn't mean that it's not operational. It
I
doesn't
bought
mean
some
that it still
options
doesn't have an effect on the way we
yesterday or the day
receive
before.
information and
Apple
how
at
we
105. I made 150% and got out. And I have about two
And
more options left.
this is the area.
Let's see what
Learning to
happens.
identify and neutralize self-sabotaging beliefs is an area that can take
Apple
quite a
being
bit
down 25% in 3 weeks. That's a given.
Can take quite a bit of expertise, as a matter of fact. Now,
Oh, you did put some.
you might be saying to yourself,
wow.
Does that mean that
Very nice.
What you're saying to me is that I really have to.
That CEO is riddled with fraud.
My identity or personality.
NKLA, what a fraud.
No, you do not. You don't have to go through that process. But if you choose not to go through that process, then you're going to have to do something to compensate.
Oh, calls for Amazon. Wow, that's big money.
You can create consistency
that's
without
big money.
Having to go through.
I just picked up a few shares of Amazon
that might argue against
day before yesterday.
Increased prosperity, or being, accumulating
that's
more and more
money.
As a trader, put it that way.
Calls on Amazon. Wow.
But if you don't, and these kind of beliefs do exist, you will have to adopt a trading regimen that
Good
compensates.
for you, El Miller.
We'll talk more about that later on Sunday.
Very nice.
Are you guys kind of with me on this
Don't
stuff?
give it back.
Okay.
Don't give the money back.
And then the next area, the fourth area, is euphoria.
That's
Euphoria is big.
All right.
Euphoria is big.
Okay.
Now, just briefly, euphoria.
I see you growing.
Euphoria, let's say, is we know there's probably many ways that we can describe euphoria. The easiest way for me to describe it would be it's a riskless state of mind. Think about that. It is a state of mind in which we have no ability to perceive risk. Okay? In a state of euphoria, nothing can go wrong as far as we're concerned. Nothing. Now
don't give that money back, because sometimes you get cocky.
Nothing can go wrong.
Believe me, it happened to me. It's like you feel you can't do anything wrong. As soon as you size in and step the money up, boom.
However, we all know
you
that.
lose.
I may not agree with that.
Just take your time, grow slowly.
What? Yeah.
Tilray almost did me in too.
The problem is that when you're in a
Tilray, I was watching Tilray at $18.
It's the least likely.
Tilray was going 20-30% every day.
Setting limitations on your behavior.
I started a position at $50. Bought Tesla,
seems, at least
Tilray at
from my experience,
$50.
everyone seems to have a
and then I
different
sized in
threshold
at
for entering into
$300. I said I'm going big.
And there is a
$300 was the top.
There's definitely a difference between
Stock dropped 50%. Tilray. I quit trading for like a year or a year and a half. I gave it a break. Yeah, you got it when it's not working out. You got to give it a break, and then come back fresh.
Confidence.
So I gave it a break and focus on real estate for a little bit.
I'm not a good speller, so you can get me on this real easily. Anyway, there's definitely a threshold. I've worked with traders who can flip into a state of euphoria on first winning trade. Really. For most people, it takes more than just one winning trade. However, like I said, once you flip into that state of mind, And it is chemically based. I mean,
El Miller, I have some
scientists
good
have found
ebooks
that the chemicals that are
on
in our
my
brain during
playlist.
the
If you go to
euphoria
playlist,
are very different.
check
than,
out
you
those
know,
trading ebooks.
the kind of
Let it
endorphins
put
that
you to
are-
sleep
well,
at
not
night.
different, it's just
Believe
that
me,
you've got an increased
it's
level
gonna
of
cement
endorphins,
in
I
your
guess,
brain.
that are flowing through your brain.
Just watch
that
them at
cause
night.
not
Let
to
it
be
put
able
you to sleep.
perceive
I'm telling you.
risk.
Great, great
And
wealth
so
of
what you're going
information.
to have to do again is develop or institute a trading regimen that compensates for this. Meaning that you have to be able to recognize when you have flipped into a state of euphoria, and then what's even more important, be able to stop trading. Stop trading. I don't know of any other way to handle it. I really don't. After all these years of doing this, and thinking
No worries,
about
no
it,
worries.
I mean, euphoria is a great place to be. There isn't any other state of mind that would be, let's say, that would be better than being in a state of euphoria.
This game takes
You
years.
just don't want to necessarily be in a state of
You're
euphoria
not gonna
while
get this
you're trading.
overnight. Sometimes you get lucky early, and then people they blow their account. They
Because
get cocky.
the tendency would
You gotta be
be
disciplined.
to overtrade.
All right,
It
El
would be
Miller,
almost
no
impossible to
worries.
keep yourself from
Thanks
putting
for
on a much
subscribing
larger
again. I
position than
appreciate
what your
you.
money management,
Set your
say, whatever
notification, all
money
right?
management guidelines you
I
use,
upload about
whatever money
between
management guidelines
7
would
and
call for
9
in your
a.m.
particular
every day.
situation.
Every day.
And if you do, and then of course as your size increases, then the market just, the amount of distance the market has to move against you to cause you to flip in from euphoria into complete terror or mind freeze is just very tiny.
Let me get some water.
So
I'll be
you go
right
from
back.
this, you go from heaven to virtual in a state of mind that's heaven to hell in one instance, just by having the market move a few ticks against you. And the problem is that this can create an enormous amount of psychological damage that's really hard to recover from. It's extremely difficult to recover from this. Not that it can't be done, but see, the way most people look at this, most people look at this as like a supreme betrayal. It goes into a category in their mind where they were betrayed. And some people would even say that they were betrayed by God. Or even think that. It's very possible for people to think that. It can really be damaging. So you're kind of all looking at me like, okay, what do we do now? So I'm going to give you a framework to be able to recognize this. And when you think about this, if your objective, if what you're saying to yourself or me or whatever by being here is that my objective is to create consistent results, that depending on how strong that desire really is, will in essence be part of the tools that you will use to be able to recognize when you have actually flipped into that state of euphoria and say to yourself, you know what, I'm going to enjoy myself and the money that I've made getting there some other way other than trading. I'm going to stay in that state of mind, but I'm just going to be doing it with my friends or my family or my kids or whatever. Or maybe you guys are all looking at me like you know really what I'm talking about.
I'm trying to get you for it.
So what we're going to focus on in this workshop is we're going to focus on those last three skill sets.
Is there a psychological profile that suggests that you should be trading or suggest you be trading?
Okay, the question is there a psychological profile that would suggest that you shouldn't be a trader?
Or should be, or could be a better?
Well, when you say psychological profile, I guess you're going to have to be more specific. Do you mean personality types?
Yeah.
Yeah. See, the problem with me answering that particular question is that I've never looked at personality types as being relevant. I don't see. To me, personality. When psychologists categorize people in personality types, to me it was like what they're doing is just making their job easier. They kind of pigeonhole people into certain categories, so that they don't really have to think about what it is that they need to do to help this person. So I've never really categorized anything in personality types at all. I categorized everything in terms of what people believe. Because from the way that I think and the way I've developed this material, what we believe determines how we perceive information and how we behave, the decisions we make, how we feel about the results, and it doesn't really matter what kind of personality type that psychologists would say that you have anyway. But are there people, for an example, maybe to answer your question, are there people that I've met that seem to be more predisposed to being successful as opposed to, say, people that I've met that are predisposed to not being successful? Sure. People who are really rigid in their thinking, really black and white, they just have difficulty in terms of flexibility, are, let's say, predisposed to not being able to think in probabilities very well. When people who are, let's say, predisposed to make money are those people who don't give a shit about money. In other words, some of the best floor traders that I've ever worked with are floor traders that it's just a game. The money is virtually irrelevant. And so when they put on trades and they put on the kind of size that they're putting on, it isn't, they don't think about it, let's say, the way that a normal person thinks about it. What's that? That's right. I was going to say that. And they love it. Yes, absolutely. Because when you really get right down to it, you really got to love this. You really have to love it. People who are also predisposed to being successful are people who genuinely enjoy this. And enjoy it in a way where they're not necessarily addicted to it. There's a difference. Because when we talk about addictions, what we're really saying is that whenever we're operating out of an addiction, we're operating out of a state of choicelessness. All addictions create choicelessness, not choice, but choicelessness. All addictions, when we're operating out of an addiction, we're operating out of choicelessness. In other words, the addiction will dictate how we see things and how we behave. And as traders, we have to be supremely flexible in terms of what we can do or not do.
You gotta have a drink.
In other words, we always have to be acting in our own best interest.
Appreciate the likes.
And addictions will definitely
EST. What's that? The ticker symbol?
Not to act in our own best interest at all times, because
our estimated time.
Addiction. What we might have to do to be acting in our own best interest could be diametrically opposed to what our addictions.
I gotta bring out the white honey.
And so
quite an epic day. Disclaimer, please do not drink and drive.
So what we're talking about
I'm going to sleep really after this.
Is thinking patterns that are
so I could drink.
Extremely flexible. They're extremely flexible and not caring about money. And not caring about losing. See, because what we're talking
Dave's
about
drink of
is developing
choice.
A carefree state of mind.
Jamaican Magnum
Carefree
wine.
State of mind with the kind of psychological resources where we're still at the same time always acting in our own best interest. So in other words, can I interact with the market in a way where I don't need to use fear? Think about this. I do not need to use fear
Cheers.
To limit my behavior.
These are the moves I'm here for. This could change your life. I had a subscriber turn the $4,000 into $30,000 today.
Most traders.
$30,000 from $4,000.
They have to use
all
their
in
fear of
a couple of hours.
or their fear of what could happen.
2-3 hours
to limit themselves. And that's exactly what we want to eliminate.
This is the best game in town.
This ideal mindset that we're talking
just gotta
about
manage that
doesn't
risk.
have any fear. There's no fear of the market at all.
Manage
Because it's
that
really not the
risk.
market anyway, it's ourselves.
Protect your downside. Let your upside take care of itself.
The reason why we fear the market is
You don't
because
want to
we
be blowing
can't
up
trust
accounts.
ourselves. Any fear that we have of the market is just simply a reflection of the fact that we can't trust ourselves. We can't trust ourselves to do what we need to do when we need to do it without hesitation, without reservation or internal conflict or argument. Does that make sense to everybody? Okay, so I said before, we got those four broad skill sets, and so what we're going to do is we're going to focus in on the last three: learning how to think in probabilities, learning how to identify and neutralize self-sabotaging beliefs, and setting up a regimen so that you can recognize when you flipped into a state of euphoria. Now, and we're going to do this all within the context of the three developmental stages of a trader.
Dow Jones closed down
Trading
1.92%.
trading
Is that
subjectively
right?
and trading intuitively. So what I'm going to do is I'm going to take all this information that we're going to go through tonight,
Nasdaq
all day
down
tomorrow,
3%.
and then part of the afternoon on Sunday,
Heavy,
part of
heavy
the morning
loss.
on Sunday.
Heavy
I'm going to
loss.
put it all within this context.
SPI Energy soars more than 4,000%.
Mechanically, subjective, and intuitively.
4,000%.
And the reason why I do it this way is because, again, I don't have a profile of people who attend this workshop, and I've gotten people who are novices all the way to people. The biggest trader I had was somebody that had $1 billion under management, and so everyone's at different levels of development in terms of what they need.
Can't answer any text right now.
So there may be traders, there may be people in this room that are, let's say, at a point where they can trade subjectively and are now, getting, say a high volume of intuitive impulses about the nature of what the market's going to do. And so what I do is give you these skill sets for each one of these levels of development, or these skills within each of those levels of development. Chances are, however, if you haven't completely learned how to think in probabilities, you're going to end up in the mechanical stage of trading, regardless of how many years you've been doing this.
It's all about SPI today.
And the reason why
SPI
is because I'm going to teach you how to use the mechanical stage of trading.
soars more than 4,000%.
Integrate all the
Do
principles
the
of what it
maths.
means
4,000% move
into your mental environment in a way where it becomes who you are.
And that's just regulation time. It was lower in the pre.
Where it virtually becomes
When I
impossible.
tweeted out, it was at $1.80.
It becomes impossible to make a trading error. It's just not part
Sign
of
up
your
with
identity.
my Webull
It's
link
not part of who you are.
to catch these nice prices. Webull, they get the news early,
What's that?
way before Yahoo Finance.
You mean financially? Oh.
Being successful.
Oh,
You get 3 free stocks. 3 free stocks. Minimum deposit required, $100. Limited time offer
I'm not
only.
saying that you're
End
trying to
September
accomplish.
30th.
I'm not saying that you have to try to do anything in terms of subjectively or intuitively. All I'm saying is that I will teach you how to use the mechanical stage of trading to integrate all the trading skills, mental skills that you need so that you can become consistent, whether it's trading mechanically, subjective, or intuitively. I'm just saying we're going to look at trading in a very different way. We're going to look at trading in a way like, how am I going to use my trading and what I've learned about how to identify an edge to actually create certain skills inside my mental environment? That's what I'm saying. And then once those skills are set, then you can do anything you want. You want to trade subjectively and you want to trade intuitively, then you can do that. But there are some constraints there, because remember when I said if you don't want to get into identifying and neutralizing self-sabotaging beliefs? Well, when you start trading subjectively, a lot of those things start making a lot of money. A lot of those beliefs, if they exist, will start working on the way you see the market and how you behave. And therefore, one of the compensating factors.
Get this, the volume on SPI today,
And I'll explain all that.
338 million. 339
to really
million.
learn
Epic, epic.
or understand
All eyes on SPI today.
what it means to think in probabilities, we really have to get at the very core or the very.
I'm live. Could I call you back?
Foundation of what makes prices move.
Sorry about that.
This is really critical. And what amazes me is how many times, I've over the years, I've done these kind of presentations, especially in huge conferences, where people have traded, and they've been trading for a long time, and they really don't understand what makes prices move. At the very fundamental reasons why prices go from one price to another. And it's of paramount importance. Not only, like I said, as a foundation for learning how to think in probabilities, but also for learning how to read the markets. So, for an example, if we've got 12, 11, 10, 9, 08, and the last price was 10, what does that mean, first of all? When the last price is 10, what does exactly that mean?
That's fairly price.
Yeah, that's fair value, right? In other words, it's what someone's willing to pay and what someone's willing to sell for and what someone's willing to buy for. Now, if you look at trading, when anybody puts on the trade, no matter what kind of trade it is, there are only two outcomes to every trade, are there not? Right? I need you guys to nod your head, okay? At least tell me that you're with me on this, okay? There's only two outcomes to every trade. What is it? What are those two outcomes? There's going to be a winner or a loser. So every trade that we put on has only two possible outcomes. Well, it could be break. But how long is it going to stay break even? No, that's not what I'm saying. Say you could put on a trade at 10, and how long is the market going to stay at 10? Okay, that's what I'm getting at. All I'm saying is that yes, you can scratch trades, but look, as of yet, I have not met somebody. Well, let's put it this way: and everyone trades. We only got two outcomes to every trade, and everyone trades for the exact same reason. And what is that reason? To make money, right? And I have yet to meet somebody that actually consciously put on a trade before they put it on, thinking it was going to be a loser. I have not met that person yet. Now, I'm not saying subconsciously they didn't hope that it was a loser for some reason or another, but at least consciously, everyone trades for the exact same reason. Now, so we've got everyone trading for the exact same reason. We've only got two outcomes to every trade that you put on. It's either going to be a winner or a loser, and there are only two ways to make money. You have to buy something low and sell it back at a higher price, or sell something high and buy it back at a lower price. Those are the only two ways that you can make money. Now, if that's the case, and the last price of something was 10, where everyone agreed, at least in that moment, two traders or more agreed on the value of something, what is going to cause the price to go to 11 or down to 9? Okay, you're saying imbalance. That is correct. That's right. Okay, that is absolutely correct. But let's be a little bit more detailed here.
There's more demand than supply.
Well, okay, you could. I'm not going to argue with that, but that's not the answer I'm looking for.
More buyers and sellers.
That's not the answer I'm looking for either. Perceived value, yes. Okay, that's close. That's what? Look at it this way, guys. Okay, if for someone, if the last price of something was 10, for the price to go to 11, it means you've got a buyer and a seller, right? You've got someone who sold it at 10 and someone who's willing to buy it at 10. Now, someone who was willing to buy it at 10 is doing the exact opposite of what they need to do to make money relative to the last price. Now, think about this for a second. The last price was 10. Low, if I've got to buy low and sell high, or sell high and buy low, low is 9. The last price was 10. Low is 9 relative to the last price. If I'm willing to buy at 10, what does that say about what I think that where prices are going to go? What? Yeah. Yeah, we say perceived value, exactly. In other words, let's look at it like a football game, a basketball game, a prize fight, or whatever. We look at, everyone talks about, let's say, the word momentum. Who's got the momentum on their side? If you take these two traders, the guy that's selling it at 11 is doing exactly what he thinks he needs to do to make money. He is selling high relative to the last price. He is being passive. This is what's critical. He's being passive. Remember that everyone trades for the same reason. Go ahead.
Why does the person selling have less information than the person willing to buy it has stronger information?
Well, let's put it this way. I'm not saying that the seller has less of a conviction. You could have a very strong conviction and think you just got a deal, right? All I'm saying is that we can say, and that could really be the case, and that kind of conviction can stop prices on a dime, can it? Okay, so that could be a reversal right there. All I'm saying, David, is that if you look at these two people, you could say that the guy that's willing to step out and
5
step
more
up
minutes
and
on the
bid
live.
price up,
I'm up since 3:30 a.m.
let's say,
Gotta get some rest.
you're right, he doesn't have to have a stronger conviction, but for prices to keep on moving up, then we'd have to say that the buyers have a stronger conviction than the sellers. They have to, because they're willing, because one, not only are they willing to bid the price up, but that the conviction itself might not be as strong in this case. There might just be more buyers than sellers. So it's a combination of two things. It could be either there's a stronger conviction, or there's more buyers and there's not enough sellers to absorb the buyer's orders, right? And if there's one at the point at which there's enough sellers that come into the market to absorb all the buy orders, then what's going to happen to price is going to reverse. So it can be a combination of two factors. It could be just numbers or conviction itself. But to make the point, what I do is I just usually say conviction, because really all price movement is a function of what people believe about the future. That we can say for sure. There's only two ways to make money. You have to buy low and sell high and buy low. And for the price to go from the last price to this price, someone has to be willing to step out and bid it up and pay more than, do the exact opposite. That's the important part. That's why I say more conviction, because he has to do the opposite of what he needs to do to make money. If I'm only doing this to make money and I've got to do something that's opposite relative to the last price, then that is an indication, okay, that, let's say, that's an indication that there must be more conviction, at least in that moment, probably. What's that?
Okay.
Okay? Okay, so what we have is we have now a group of people that are trading with one another. And as a result, this collective group of, now we look at it from a collective level, this group of people that are all acting, let's say, in their own self-interest, trying to make money for whatever reason, by bidding prices up or offering them lower, they create behavior patterns. They create group collective behavior patterns. Just the same way individuals will act the same way under certain circumstances over and over again. Groups of individuals will act in ways, or let's say characteristic ways, over and over again. Let's see, where are we? And so what technical analysis does is basically identify these patterns for us. So we can use any number of tools that we've learned. We can use trend lines. We can use, moving averages, Fibonacci relationships, stochastics, all these technical tools that we've learned about. All they really do is categorize and organize group human behavior in a way where we can identify what we're going to call an edge. An edge is simply a higher probability of one thing happening over another. So when we talk about an edge, we're talking about simply there's a higher probability of one thing happening over another. Okay. Now, let's see where we go. Now the problem is that even though technical analysis creates or identifies these patterns for us, patterns imply consistency, do they not? So in other words, if I can identify a pattern that repeats itself over and over again, it implies to me that I'm going to get a consistent outcome. But do I get a consistent outcome? Well, yeah, I do. But it depends on what level you're talking about.
Thank you for watching.
At the
Dave
macro
Natch,
level,
I'm out.
over
Please
a
like,
large sample
please
size
share,
of outcomes,
please subscribe.
it will be consistent. Just like the flip